The use of central bank digital currencies can help move away more people and businesses from the informal into the formal sector, thereby creating the tax base of the country.
Last year, the Naira was written off as a failure, one of the weakest currencies in the world. Today, it's soaring, forcing the same analysts who mocked it to admit they were wrong. Nigeria didn't stumble into this. It fought for it. Bold central bank moves, record-breaking non-oil revenues, and the Dangote refinery's rise have flipped the script. The question now isn't whether the Naira can survive, but how far it can climb. Let's break down how Nigeria turned collapse into a comeback. It was supposed to be another grim year for the Nigerian Naira. After being ridiculed as one of the worst-performing currencies in 2024, no one in the global financial community expected much more than another slide into irrelevance. Traders in London, New York, and Frankfurt had already written their reports. Nigeria's currency was a case study in how not to run an economy. The narrative was set until it wasn't, because in the first quarter of 2025, the Naira pulled off one of the most stunning reversals in emerging market history. Instead of collapsing further, it surged, overtaking dozens of peers and forcing analysts to rewrite their forecasts overnight. Financial markets, which once treated Nigeria as an afterthought, suddenly found themselves glued to the ticker. The Naira was not just rising, it was racing. For a currency once synonymous with weakness, this was nothing short of an earthquake. What makes this shock more dramatic is the speed at which it unfolded. Barely months ago, the Naira traded at lows that seemed irreversible, haunted by shortages of foreign reserves and battered by inflationary fears. Then, as if a switch had been flipped, demand for the currency began climbing. Market players scrambled to adjust their positions, hedge funds reassessed their bets, and global headlines began using words like resurgence and comeback, terms rarely associated with Nigeria's financial story. The sheer velocity of this rebound turned skepticism into awe. But why did this turnaround hit so hard? Because it wasn't the result of chance. The Naira's rise is not the product of good luck or a sudden improvement in global sentiment toward emerging markets. It is the result of deliberate, calculated choices made within Nigeria itself. For years, critics accused the country of indecision, of watching problems worsen without bold action. In 2025, that narrative collapsed. Nigeria didn't just act, it acted with ferocity. At the center of this shock lies one undeniable fact: confidence returned. And in currency markets, confidence is everything. Once traders sense a country is willing to defend its money, the dynamic flips instantly. Nigeria's central bank, long accused of being reactive instead of proactive, unleashed a policy shock so strong that it made global investors stop and reconsider. That moment was when the Naira's decline ended and its rise began. What makes this development even more fascinating is the symbolism it carries. For decades, African currencies have been treated as fragile, perpetually at the mercy of foreign capital flows and global commodity prices. The Naira's rally is not just about numbers on a chart. It is about rewriting perceptions. It is about showing that an African giant can defy expectations, take control of its narrative, and shock the same financial world that once dismissed it. For Nigerians, this isn't simply financial data, it's vindication. It is proof that their country, often painted in tones of despair, still has the capacity to surprise the globe and command respect. And make no mistake, this is only the beginning of the story. The breaking news is that the Naira has roared back. But the deeper question still hangs in the air. How did Nigeria engineer this comeback? And what is the strategy behind it? When the Naira first jolted upward, many dismissed it as a short-term bounce, the kind of volatility emerging markets are known for. But those who looked closer realized this was no accident. It was the result of a deliberate, calculated move by Nigeria's central bank. In a world where central banks tiptoe with cautious 25 basis point adjustments, Nigeria unleashed a policy earthquake. Interest rates were hoisted to 27.5%, a level so staggering that it stunned global markets into attention. This was not a timid adjustment, it was a declaration. It told the world that Nigeria was done playing defense. It was the monetary equivalent of slamming a fist on the table and saying, "The naira will not be allowed to collapse further." Overnight, the cost of borrowing in Nigeria skyrocketed, but so did the rewards for investors willing to hold Nigerian assets. And here's the genius. This wasn't just about numbers, it was about psychology. By daring to lift rates far beyond inflation, the central bank signaled absolute seriousness, the kind of iron-willed commitment that convinces markets that speculation against the naira would now be a losing bet. The effects were immediate. Nigerian bonds, once considered risky paper, became irresistible treasures. Where else in the world could investors find yields that dwarfed US Treasuries and European bonds many times over? Global capital is not loyal. It chases returns. And suddenly, Nigeria was offering some of the most mouth-watering returns on the planet. Hedge funds that once ridiculed the naira now began lining up to buy it. Analysts who warned clients to steer clear were forced to admit they had underestimated Nigeria's resolve. But the brilliance of the central bank's move goes deeper than just raising rates. It lies in how Nigeria has historically managed capital flows. Unlike many emerging markets that allow investors to swoop in, make profits, and flee at the first sign of trouble, Nigeria has long maintained restrictions on the easy movement of dollars out of the country. In other words, money can flow in easily, but flowing out is another story. Critics have complained about these controls, calling them heavy-handed. But in moments like this, they become strategic armor. Investors drawn to Nigeria's yields cannot simply treat the economy like a casino. They must play by Nigerian rules. This is why the central bank's policy is more than a financial adjustment. It is an assertion of sovereignty. For too long, emerging markets have bent under the weight of foreign expectations, designing policies to appease international institutions or to match the comfort zones of Wall Street. Nigeria chose another path. It chose to weaponize its own domestic conditions, high inflation, high borrowing costs, and high demand for stability, and flip them into a strength. It took the very pressures that once crushed the naira and used them as levers to pull the currency back up. Of course, bold moves always come with risks. Critics mutter that such high rates can squeeze local businesses and choke credit growth, and yes, higher borrowing costs are painful. But here is where Nigeria's strategy diverges. The priority is not immediate comfort, but long-term credibility. For a currency, credibility is survival. And without survival, there is no growth to protect in the first place. The central bank recognized this brutal truth and acted accordingly. Now, with investors reassured that Nigeria is willing to defend its currency with teeth, the foundation has been laid. But monetary firepower alone cannot carry a nation forever. High interest rates attract traders. They don't build economies. What sustains a currency is production, revenue, and real economic diversification. Nigeria seems to know this, because even as the central bank was pulling its monetary levers, the government was quietly building a second pillar of support, one that goes beyond the old oil dependency. And that brings us to the next stage of this story. If monetary policy stabilized the naira, how did Nigeria's revenue revolution give it new life? Let's pause for a second to say, big thank you to the Black Culture Diary community, where Black voices, stories, and legacies are preserved and amplified. By becoming a member, you're not just supporting the channel, you're becoming part of a powerful cultural movement. Let's continue. If the central bank's monetary firepower restored confidence in the naira, Nigeria's booming revenues gave that confidence something real to stand on. Because no matter how high interest rates climb, no currency can survive on borrowed credibility alone. What keeps it alive is the strength of its economy. And in 2025, Nigeria delivered a surprise that silenced the skeptics. Non-oil revenues surged by 40% to 20.5 trillion naira in the first half of the year. For decades, the story was written in crude oil. Global analysts treated the country like a one-trick economy. When oil prices were high, the naira breathed. When they collapsed, the currency suffocated. This dependency was used to dismiss Nigeria as fragile, permanently chained to the whims of OPEC quotas and global commodity traders. But this year, the numbers told a different story. The sharp rise in non-oil revenue was not just a statistical blip, it was evidence that the country was quietly building new engines of growth outside of oil. What fueled this surge? A mix of policy, resilience, and ambition. Agriculture, long treated as Nigeria's neglected stepchild, is finally stepping into the spotlight. Expanded production of rice, cassava, and maize has not only cut the nation's import bills, but also boosted local tax revenues. Manufacturing, too, is gaining traction, with new factories springing up in textiles, cement, and consumer goods. The government's investments in infrastructure, from roads to energy, are creating supply chains that didn't exist before, allowing industries to flourish where they once withered. And then there is technology. Lagos, often called Africa's Silicon Valley, is no longer just a slogan for startups. Tech hubs are producing real companies that generate revenue, attract foreign capital, and employ young Nigerians who would otherwise be left out of the formal economy. Every new startup paying taxes, every fintech breaking into global markets, adds another brick to the foundation of Nigeria's fiscal house. The psychological effect of this transformation is as important as the financial one. For ordinary Nigerians, the idea that their country can earn money beyond oil is empowering. For investors, it changes the risk calculus. A diversified economy is harder to destabilize. It means that when oil prices fall, as they inevitably do, the naira will not collapse with them. The more non-oil revenue flows into government coffers, the less vulnerable Nigeria becomes to external shocks. This revenue boom also strengthens the government's hand in global negotiations. For years, Nigeria approached debt talks, trade agreements, and aid discussions from a position of weakness, its fiscal health tethered to oil prices it could not control. But today, with domestic revenues swelling, Nigeria can stand taller. It doesn't need to beg. It bargains. This shift in posture reinforces the confidence already sparked by monetary policy, creating a double-layered defense for the naira. Strong policy at the central bank, strong revenues at the treasury. But this revolution is not just about shielding the naira from collapse. It's about creating a virtuous cycle. With more money flowing into the government's hands, there is more capacity to invest in the very sectors driving diversification. Revenue from agriculture funds new irrigation systems. Revenue from manufacturing supports better roads. Revenue from tech fuels education and connectivity. This is how Nigeria builds resilience that lasts beyond one economic cycle. Still, we cannot ignore a critical question. If non-oil revenue has become a powerful shield, what role does oil now play in this new Nigeria? For decades, it was the lifeblood, but in 2025, oil is being reimagined, not discarded. And the symbol of that reimagining is one name every Nigerian knows, Dangote. Here's a reminder to please like and share the video and subscribe to our channel to watch more videos on Black culture, history, civilization, and identity. Let's continue now. For most of Nigeria's modern history, oil has been both a blessing and a curse. It made the nation wealthy on paper, but vulnerable in practice. The paradox was maddening. Africa's largest crude producer exporting millions of barrels while importing refined fuel at punishing costs. Each liter of petrol brought in from abroad drained dollars, weakened reserves, and hammered the naira. For decades, this cycle was Nigeria's Achilles heel, until 2025, when the game changed. The catalyst of that change is a name already etched into Nigerian history, Aliko Dangote. His refinery, the largest in Africa, and one of the most ambitious industrial projects ever attempted on the continent, has begun reshaping Nigeria's energy landscape. This is not just another facility, it is a national weapon. By producing hundreds of thousands of barrels of refined fuel every day, the refinery cuts the need for imports and keeps dollars circulating inside the country. Instead of bleeding wealth through foreign refineries, Nigeria now processes its own crude, saving billions and strengthening the backbone of its currency. The refinery's impact on the naira is immediate and powerful. Every shipment of petrol that no longer has to be imported is a shipment of dollars Nigeria doesn't have to spend. In currency markets, fewer imports mean less pressure on reserves, and less pressure on reserves means a stronger naira. But the refinery goes further. Dangote has committed to buying mostly Nigerian crude once foreign contracts expire. That single decision locks value inside the country. It ensures that Nigeria's oil not only leaves the ground but also generates wealth through domestic refining, taxation, and distribution. It transforms oil from a trap into a multiplier. The symbolism of this shift cannot be overstated. For years, foreign critics mocked Nigeria for failing to refine its own oil, portraying the nation as dependent and disorganized. The Dangote refinery is Nigeria's response, a towering statement that the country is not condemned to inefficiency. It is proof that Nigerian industrial power can rival any in the world, and its timing could not be more critical. With OPEC Plus allowing higher Nigerian output this year, more crude is available to feed the refinery, creating a self-reinforcing cycle. More production, more refining, less dependency, stronger Naira. Beyond economics, the refinery represents sovereignty. By controlling its energy destiny, Nigeria reduces the leverage foreign actors once held. When international oil prices spike, Nigeria no longer faces the double pain of higher import costs. When foreign refiners set terms, Nigeria no longer has to bow. With the refinery, Nigeria dictates its own fuel future, and with that control comes a new layer of strength for the Naira. But there's another dimension often overlooked: the jobs, the supply chains, and the industrial ecosystems the refinery is spawning. Thousands of Nigerians are employed directly and indirectly. New businesses spring up around it: transport companies, service providers, manufacturers of spare parts and machinery. This is how oil is reimagined, not as a single export commodity, but as the anchor of a vast homegrown economy. For the Naira, this means support from real production, not just speculative flows. And yet, even with this revolution in oil, Nigeria's rise does not exist in isolation. The refinery strengthens the Naira, yes, but the global environment amplifies its effects. A weak US dollar, falling under the weight of Federal Reserve rate cuts, is creating a perfect storm. The question now is, how does Nigeria's transformation collide with America's weakness to propel the Naira even higher? Because while Nigeria was tightening its grip on revenue and energy, the United States was losing its hold on the dollar. The US dollar index, which once stood tall at 110, has slipped to 96, hammered by expectations that the Federal Reserve will cut rates to cushion America's slowing economy. For decades, the dollar's dominance was treated as untouchable, the ultimate haven. But in 2025, cracks are showing, and Nigeria is perfectly positioned to take advantage. Currency markets are mercilessly competitive. When one giant stumbles, another contender rises. As the dollar weakens, investors instinctively look elsewhere for strength, and what they now see is a Nigeria that has rewritten its economic narrative. Instead of volatility and fragility, they see bold monetary policy, surging non-oil revenue, and industrial sovereignty through Dangote's refinery. The combination makes the Naira not just an emerging market curiosity, but a serious contender in the global carry trade. Traders aren't just dabbling, they're committing. In a world searching for yield and credibility, Nigeria offers both. What's happening is bigger than short-term speculation. It's about a shift in how the world views African economies. For too long, Africa was painted as a continent dependent on handouts, its currencies forever vulnerable to global shocks. But the Naira's rise is tearing down that stereotype. Nigeria has turned its story into one of self-assertion, using domestic reforms to capitalize on global weakness. In a sense, the Naira's climb is not just financial, it's geopolitical. It signals that Africa's largest economy is no longer a spectator in the currency wars. It is a player reshaping the board. The effects ripple beyond the charts. International partners who once dictated terms to Nigeria are recalculating. A stronger Naira gives the government more leverage in trade talks, debt negotiations, and foreign investment discussions. Countries that dismissed Nigeria as unstable now find themselves courting it, eager to tap into an economy that is proving more resilient than many in the West. The narrative has flipped. Instead of Nigeria adjusting to global conditions, the world is adjusting to Nigeria's resurgence. And the timing could not be more symbolic. Across the globe, emerging markets are rising as the dollar falters, but none carry the same weight as Nigeria. The South African rand, the Brazilian real, and the Indian rupee may all benefit, but Nigeria brings something unique: the moral victory of overturning years of ridicule. Every uptick in the Naira is not just money gained, it is pride restored, reputation reclaimed. For ordinary Nigerians who bore the humiliation of a collapsing currency, This surge is a reminder that their nation is not condemned to weakness. For global investors, it is proof that they can no longer afford to ignore Africa's giant. Of course, skeptics remain. They whisper that this could be temporary, that Nigeria's gains depend too much on favorable conditions abroad. But such doubts miss the point. The Naira's rise is not riding on the dollar's fall alone. It is powered by deliberate domestic choices that have created resilience. Even if global tides shift again, Nigeria now has stronger defenses, policies, revenues, and industries to weather storms that once sank it. Which leaves us with the larger truth. Nigeria has seized its moment. The fall of the dollar has given the Naira a global spotlight, but what sustains that spotlight is Nigeria's determination to stand tall. For the first time in a generation, Africa's largest economy is not defined by crisis, but by confidence. And if the Naira continues to climb as expected, breaking through the 1,476 mark and beyond, it will not just be a financial headline, it will be the symbol of a new Nigeria rising on its own terms. Do you think the Naira's rise is just the beginning of Nigeria's financial dominance? Has Africa's largest economy finally broken free from the shadow of dependency? Let us know in the comments section. If the dollar keeps falling, could Nigeria become the world's new haven? Do you want to watch more videos like this one? If so, subscribe to our channel and press the bell icon next to it. We have decided to bring videos on something nobody talks about: the Black culture, civilization, history, and evidence about how glorious Blacks have been. Thanks for watching, and until the next video, stay tuned.